Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market and figure out what is happening to Tesla stock today and what we can expect as usual moving forward. So with all that being said and done, if you enjoyed the video, don't forget to hit that like button. It does help a lot. I would appreciate it. This is not financial advice. I am not a financial advisor. And again, my membership section is live. The link is down below for just $2.99 a month. You get access to all my intraday thoughts, posts, updates, options flows, updates on Tesla, etc. every single day that the market is out. So just again, $2.99 a month. The link is down below in the description. But let's just get right into it and talk about Tesla. So Tesla closing in just about 10 seconds here, closing down on the day, about 5.5%, we'll say, which compared to the market is, maybe an arguable slight underperformance, but the market is pretty red today, right? Down almost 2% on QQQ, 1.5% on SPY. So it's a pretty bloody day for the market with all that being said and done. So keep that in mind. But, very quickly, I want to talk about the market super quickly before we actually jump into Tesla. But, the market is, for instance, QQQ came down, broke down pretty aggressively, came back up, retested this old area that was support, and now it's kind of rejecting from there pretty aggressively. And it looks like it's setting up a pretty massive bear flag, just as SPY does as well. Just a pretty obvious bear flag, which if these play out, I think can break us down somewhere to around, retesting all-time highs for both of them, really, which would be another, bit of a drop for SPY, for instance, right? SPY will come down to somewhere around, 480, we'll say, right? QQQ will come down somewhere to about, like 405-ish, right? Which, is a bit of an extra drop from here, especially when we have earnings reporting from Amazon. We have Apple, I believe, tomorrow or Thursday, right? We have AMD reporting. So we'll see how they do, obviously. But, just keep in mind, right, that this obviously can affect Tesla. Now, with that being said, though, let's talk about Tesla. What can we expect? So people were obviously very euphoric yesterday, and I was telling my members the whole time, and, including you guys in the video, saying how, when the bears were euphoric down here, they got overly greedy, and look what happened. Now the bulls are getting pretty euphoric up here. We had a pretty substantial run, massive gaps, and we are extremely overbought. And, just essentially, I was giving signs of caution, right? It's good, it's phenomenal run. Don't get me wrong, I love this run, but like, man, we're just getting a little bit euphoric here. And today we get a beautiful 5.5% down day, which is a pretty sizable down day. But with that being said, Tesla, in my opinion, is still holding up decently. And what I mean by that is it's holding a pretty important level. Now, there is a risk of a gap down a post-market. Amazon just went down 5%, then went back up. I don't know what's going on with that stock. But the biggest risk here is the fact that, an earnings report from Amazon, AMD, right? They can gap us down potentially, right? We have FOMC tomorrow, so there's still some catalysts on the way that can bring us down a little bit further. But like I said, like I said yesterday, and like I'll say today, the first level to watch out for is pretty much exactly where we close at, this rough 183. Of course, give or take a couple dollars, here or there, maybe like 182, maybe even 181, right? That's just the very low 180s. Is a crucial level, right? It's a very crucial level for many reasons. Number one, obviously acted as support here, obviously acted as a resistance here, and now in theory acting as a support, right? Not super convincing just yet, considering we closed at the lows of the day, but there is potential there, right? If there's an area to act as a support, it is pretty much right around where we are right now, give or take a couple dollars, obviously. Now, if this does not act as a support, and if we do gap down for whatever reason, or we just really breach below this 183 to like, let's just say 180-ish level, that's when I do believe that we're probably on our way back down to about 175 to maybe even like 173 for many reasons. And I brought up a pretty nice little, I wrote down a pretty nice little post here from my members. I can't remember this one here, right? So my slightly longer picture on the daily is this. If we get this bounce to 190, which pretty much I said if we hold earlier this 183 level, I can see 190. But if we get this bounce to 190 or at least go sideways for a bit here in the mid 180s, I still see a fairly reasonable chance that we drop to the 175 level-ish, right? Maybe a little bit lower, but around 175, which would do four things. First thing is it's going to retest the 50-day moving average, which if I go to the daily chart, you can see this green line right here, right? It's pretty much sitting right around 175.5 right now. So that's going to be number one. We broke out of it, right? It's been a massive resistance several times. We just never could get above it. We gapped above it. And now coming back to retest roughly around that area is not really too much of a surprise if that were to happen. That's number one. Number two, revert back to the mean on the daily by that time, assuming that this takes a week or two to play out. So for instance, if we bring out this bad boy here, right, assuming this doesn't happen, let's say tomorrow, it can, but let's say it doesn't. And let's say this does take another week to play out. This will slowly play catch up to us. And I think it'll kind of meet this 50-day moving average pretty much around that mid-ish 170s. And then if the daily does finally eventually come down there, it'll essentially revert back to the mean, reset the daily from being severely overbought. Now it's less overbought, but still pretty overbought, right? And it'll kind of reset this daily, right? Similar to how the weekly was reset, you can see here we were severely oversold, and now we came back up to this white line, and we so far are getting rejected by it. So far printing an ugly looking hammer candle, inverted hammer candle, right? But there's obviously more time in the week, right? Which, by the way, the month did finish. We'll talk about the monthly candle soon. But that's kind of the idea. It'll kind of reset the stock from being, in this case now, overbought. That's number 2. Number 3, retest the volume profile around that 175-ish level, which is going to be, of course, this massive volume spike we have right over here, which if I remove this, you can see this is an area that, we had a lot of volume. It's kind of like the point of control right now, right? And usually the way point of controls work is they act as magnets, right? For better or for worse. So obviously if we zoom out here, that's the point of control is much higher, which I think will eventually come up here. But in terms of like the shorter time frame within the next, week or two, right? If we zoom in here like this, you can see that the point of control, which is usually the area with the highest volume profile, is pretty much right around this mid-ish to low-ish 170s, which, they usually act as magnets, which would not be surprising if we also come down to this area and turn it now back into a support, which it did act as a resistance just a few days ago even. So that's number 3. And number 4, obviously we have the massive fair value gap here, which also would fill that fair value gap. Now we have another bigger one down here, obviously from the earnings gap. I don't think we'll fill this personally. The only way I see us filling this is if we breach below 170. If we break below 170, then at the very least 160, if not even breaching into the mid 150s to fill these fair value gaps over here becomes probable. But, obviously we take it level by level, right? I don't know if we'll come down here, right? I just take it level by level. If we breach 183 to 180, then in my opinion, 175 to low 170s is next. If we breach that, 160, if we breach that, then probably mid to low 150s is next as well. So it's just, you take it level by level, right? And we can't predict what's going to happen. No one knows what's going to happen. And if you do, I would appreciate it if you could let me use your crystal ball. It's all about trying to predict based on probabilities as to what can occur based on the circumstances provided to us, especially taking a look at levels being broken for better or for worse, for the bullish or bearish aspects, right? So that's kind of the way I'm looking at it right now. And this is why personally, if we do hold this 183-ish level, I do think it's looking decent that we can at the very least come back up to, roughly around the 190s level, like the low 190s one more time, right? That really wouldn't surprise me. Starbucks reported earnings and it's tanking. Beautiful. That really wouldn't surprise me, but it's just, I don't know if we will, right? Because we can very easily gap down, right? The same way we gapped up above all these crucial levels, we can easily gap back down underneath this kind of 183-ish, give or take level, and then make our way back down to this general area. So that's kind of the way I'm looking at it right now. Then we take a look at the 5 and the 13. You can see the 5 and the 13 has indeed crossed bullish, which is good. That means the trend has officially shifted to the bullish side, which in my opinion is not a surprise. I think Tesla does overall, structure-wise, Steve, my cat's meowing a lot, I don't know why. Overall, does look bullish, right? Mainly because we broke above this 180 level, we broke above the 50-day moving average, and that's all looking pretty nice. But of course, we still have the 100-day moving average above us. So the 50 is the support, hopefully now, 100 resistance. So kind of, trading in between both of these bad boys right here, something like this wouldn't be too surprising, right? As we kind of figure out where we really go next. But overall, in my opinion, Tesla is still overall structure-wise now looking more bullish, again, in my opinion, because we had that break of structure. Like I said many times, step number 3, remember I said that, step number 1, bottom signal down here, step number 2, 160, step number 3, this 182-ish level, right? We broke above it, right? And we broke above it, and that breaks the structure, that creates a new bullish structure, and that Tesla, in my opinion, now looks a lot more compelling in terms of resuming its way back up in due time, right? But with that being said, it doesn't mean that we can't cool off here a little bit, kind of reset this overbought, like substantially overbought conditions, especially on the 4-hour chart where it's still having issues keeping up this indicator, right? And essentially, come back down to somewhere around that mid to low 170s. That is probably my main target that I'm looking at right now, is assuming 183 doesn't hold. Steve, I don't know if you guys hear him. I don't know if my mic is picking up my cat now. She's just meowing away. I don't know why. Go ahead and take this Fibonacci from here, right? So we have the swing low to this arguable swing high for now, at least, right? And we have the retracement levels you can see here on the Fibonacci, 382.5 and 618 levels, right? Which range from 175 all the way down to as low as 161. Now, because I believe Tesla is in a pretty powerful bullish reversal structure and the trend is feeling pretty bullish here, even though I still expect this retrace, I personally don't think it'll go much lower than the 0.5, right? I'd be surprised if it goes lower than 0.5 when we go down to the 160s. It's not impossible. I'll just be a little surprised to see that because Tesla's looking pretty bullish. And usually the way with these Fibonacci's work is, in this case, like the higher the level it stops at and finds a bounce from, and support and whatnot, right? So for instance, let's say 3.382, which is around that 175 level, the more bullish the momentum is, right? If we go all the way down to the 618 level and then find the bounce, to me, that tells me that the bullish momentum isn't as powerful as I personally would have liked to see it. So that's why I look at it. But 0.5 is obviously somewhere in the middle, right? still pretty strong, but maybe not as strong as the 0.382 level, which is why to me right now, based on what I believe the structure and how bullish it looks like, the sweet spot is pretty much around the mid 170s to low 170s. That to me right now is the super duper sweet spot. That is the juicy spot for now. Obviously things can change, right? Maybe it won't be, a week from now, who knows? But as of right now, based on what it looks like, that to me looks like the spot that I would be very happy to add more shares on. So yeah, that's kind of the main way I'm looking at it right now, ladies and gentlemen. So that's the main thing I'm looking at, right? The obviously options flow, right? Tesla, on the bearish flow, nothing too crazy though, right? Nothing major, right? It's not really found anywhere in the bullish flow. Flow was all over the place as well. Nothing really caught my eye today, so I'm not going to bring out too much. We did have some dark pools come in for Tesla though. So, whether that's a good thing or a bad thing, whether that's a buy or a sell is a little bit, a question mark, if you will. So we'll see how that plays out. And if these act as support or resistance, we'll, kind of keep ourselves updated on that as, the stock progresses. But again, in my opinion, the biggest factor right now, the biggest risk really for Tesla is just a gap down. I really think a gap down is the biggest risk here, which is potentially what brings us down to, this mid 170s level, right? So just keep that in mind. That's, in my opinion, the biggest concern, if you will, especially considering, I can't say I'm, excited to look at the indices the way they are right now. Right? It just looks like a massive bear flag. It's almost too obvious. Like maybe it's too obvious. Maybe it won't actually play out because it's such an obvious looking bear flag. The fact that, maybe it won't actually play out because it's just too obvious of a play. We'll see. I'm not here to, predict that. I don't really care. If it does, I'll buy Tesla more. If Tesla falls along with it. If not, I did re-enter some shares that I sold earlier yesterday. That I did re-enter. I have sold calls against them, of course, but I also have cash secure puts ready to buy more shares if we do continue lower, right? I have another one in the low 180s and I have another one in the 170s, like 175 for this Friday. Very happy to add shares there because I believe right now Tesla is still bullish. It's just, I'd rather add shares down here than up here. You know what I mean? On this nice little retrace, which I think all this retrace is going to do is essentially create a nice little bull flag, right? Which I think, we can potentially look like something like this and then go back down like this and then create the bull flag. It'll look something like this and then we break out. That's kind of roughly what I can see happening, right? That's more or less what I expect right now. So anyways, that's kind of the overall idea. So if this is the kind of content you like to hear, if this kind of information is useful for you, this is the kind of content and information I share with my subscribers on my membership section on YouTube. Again, link below for $2.99 a month. But that is essentially the kind of information I do share with my subscribers on YouTube every single day, live as it's open, pretty much as the stock is trading. As I see it, so they get essentially real-time info based on those updates, right? So if you like that, again, link is below. We'd love to have you. But if not, thanks for watching. And I will, as usual, hopefully see you tomorrow. So until then, thanks for watching. Peace.